So Charlie Munger gave this famous talk where he shared 24 tendencies in human beings which affects our judgments. So we discussed those tendencies, 24 tendencies in detail in two parts in previous two videos. In this video, we will see the implication of these tendencies in general and some important insights about our own nature as well as how it affects the investment and financial companies. So let's start. So I think the most important insight individually is that the self-reinforcing loop is always present in us. Us means human beings. So what happens is once we form any conclusion, any opinion about something, excessive self-regard gets kicked in. Then we want to have consistency with what we have concluded. And obviously when we have done some conclusion, there was some reason we arrived at. So we respect that reason and believe it to be true. And we are in general over optimist. So we think what we know is true. And doubt avoidance is also there. So what it implies is that once we form an opinion, once we form a conclusion, it becomes really hard to change it and accept something which is contrary to that opinion. So basically what it means is that we are free only before we arrive at conclusion. Once we arrive at any conclusion, we are biased. Now let's look at the forces at play with respect to temptations. So temptations are basically themselves are strong incentives, right? The temptations could be, bribery, cheating or fraud, or it could be alcohol or drugs, or it could be say adultery or any other possibility is there, but just an example. So there are temptations which are themselves attractive to us, so they are strong incentive by themselves. And if we take the first step, right, then consistency and commitment will kick in. Excessive self-regard will be there that I am special, nothing will happen to me. Over optimism will be there. Contrast misreaction would be there. So as we start gradually falling into the temptation, because it will be gradual, we will not notice it. And then there will be doubt avoidance, and finally there will be denial, which is especially true in case of addiction. So many forces will kick in if we take the first step, right? So what will happen is it will become very difficult to come out of that situation. So what it means is that it is very important to have this clarity as to what I will not do in life and decide that this is what I will not do. Okay? Because only when we decide, then we will have the will to not expose ourselves to these temptations. Because once we expose ourselves to the temptations, we become weak. And if we take the first step, most probably, it will be irreversible kind of situation. Now let's look at CEO's incentive, mainly from investment point of view. So let's look at CEO's incentive, and this is not always true what we are going to discuss, but in general this is true, this is obvious. So what happens is, what kind of people really go up in an organization? in a big company, right? So people who are ambitious, people who are competitive, right? Who want to win, people who are power hungry, they are dominating by nature, and they are very good at presentation. Great salesmen, convincing other people, and they have high energy and they are action oriented people because they are moving fast in the hierarchy. And when these people they become CEO, they are more interested in making the company bigger, right? Because that would be the next growth for them, and they are willing to take more risk, and they crave for action. They are high energy action oriented people, right? This is what really excites them. This is what really motivates them. Whereas the main job of a CEO, according to Warren Buffett, is good capital allocation. Increase the moat of the company, the competitive advantage of the company, and build and nurture culture, because culture is also a competitive edge. But these three important responsibility and focus, they are not very exciting for CEO, because good capital allocation means you have to wait for the right opportunity. So you have to wait, right? Which is not really exciting for high energy action oriented people. So this is not so exciting for them, and the first part is more exciting to them. And once they decide something, a boss decides something, you will not find people really opposing to that. Boss wants something, okay? What will happen is he is the authority figure. So you will automatically have this angle that he knows better than you. Then there is an incentive. You want to retain your job. He is your boss. He will do your appraisal. He will give you a bonus, right? And then there will be social proof, because no one else is opposing. You will say, why should I oppose this particular idea? And then, there would be some reason also explained as to why this needs to be done. So you will have this reason respecting kicking in. And finally, if there is any further doubt avoidance will also be working there. So once a CEO decides something, the opposition would be very rare of that particular idea. Now let's look at the incentives in investment world. So we'll look at various players in the investment world and what their incentives are, and this is especially useful for retail investors to know. So who are the players? So there are investment advisors, there are mutual fund agents, there are insurance agents, there is stock broker, then you have AMCs, which is mutual fund companies, then you have research analysts who are publishing research report on companies, and then you have various people coming on television and giving their views, opinion and commentary, and finally you have TV channels. So all these people, we interact with them or we listen to them, and they are part of our life if we are into the investment, if we are interested in investment. So what happens is, let's look at the incentive of these people and what will be the impact of that. So the first thing is, advisor is getting fees from you for advising you, okay? And he will not risk giving you advice which you don't want to hear. So if you are excited about something really new thing, he will not risk saying don't do that. Mutual fund agent, they get commission, right? So there is a temptation to sell you those mutual funds which offer higher commission to them. Similarly, insurance agent, they have temptation to sell you insurance which gives higher commission, whether that insurance is suitable for you or not. The stockbroker, they make money through commission. So they actually would want you to overtrade. AMCs, they make money through fund management charges, right? So they have incentive to always remain invested even if there is a risk to that there is a big fall possible. And there is also temptation to launch exciting products in the market, and that happens mostly at the wrong time. Then we have research analysts, they get salary, and their job is to keep publishing research reports. So they are forced to publish research report and keep on updating it. And then we have TV commentators, right? They must share some opinion on the market, even if it is there is no valid substantial reason for that. Similarly, there are TV channels. The TV channels make money based on advertisement, and that depends on TRP, how popular the channel is. So they are more interested in sharing something sensational, something exciting, whether it is really relevant or not, right? So when we look at all these players, you would want to ask whose incentive is aligned to making you more money. Is there a situation that they get paid only when you make more money, right? Then the incentive is aligned with you. And it is partially true that for AMC and mutual fund agent, it is partially aligned, because if your money grows, they will be able to charge more fees and commission. So it does not mean that everyone is trying to cheat you or defraud you. That is not the case. But it simply means that they might be biased and they themselves may not know it. So we need to understand the incentives well, and we should not blindly take whatever they are offering or advising us. Now let's look at financial firm. Okay, so financial firms have this very unique setup, unique situation, which is mainly true for financial firms. So they give out loans. An insurance company, they offer insurance, they underwrite insurance. And then you have investment firms, they offer advice on merger and acquisitions. And then you have consultants and consulting firms who come and help you in terms of whatever advice you are looking for. So in all of these cases, you will see that the reward is almost immediate, okay, and the feedback is delayed. In the sense, if you give out a loan now, not all of that will start defaulting now, right? It may start defaulting 3 years, 4 years, 5 years down the line if it is a long-term insurance or a long-term loan. And in general, there is no punishment unless employee has committed some fraud. Okay, so there is a immediate reward, the feedback is delayed, and there is no punishment except unless you have committed some fraud. So this creates temptation to reduce standards. You have this temptation to reduce your standards so that you can give out more loans, sell more insurance, right? Offer more merger and acquisition advice. And consultants, anyway, they get paid and they move on, right? So what happens is, because there is a temptation to reduce the standard to offer loans and underwrite insurance, you have these psychological tendencies also working to increase your temptation. First is social proof, that every other company is doing, every other employee is doing. The second is envy and jealousy. Other companies are making more money, they are getting more, higher salary, more bonus, bigger bonus. And then you have authority, your boss, your CEO wants you to meet your target, right? And once you start reducing the temptation standard, then consistency and commitment will kick in, and then there will be contrast misreaction because it will happen gradually, and then there will be doubt avoidance also going on. So because of all this, normally there would be bad loans, poor underwritings, mis-selling of products, and misfit mergers and acquisitions. Okay, this normally happens when economy is doing very well, interest rates are not so high, right? And because of that, when there would be downturn in economy, when interest rate would be higher, many of these loans will become bad loans. Then we get the feedback, which is delayed feedback, and it will result into huge losses every few years. It would be almost like a cyclical in nature. So every few years, maybe once in a decade or so, there would be huge losses which would be happening, because economy will also have its cycle, interest rate will also have its cycle, and we will have huge losses happening. And huge losses will result into insolvency for some institution. So some financial firms will become insolvent because of huge losses. But financial system, which consists of all the financial firm, has lot of interconnectedness. It means every firm owes money to many other firms. And because of that, what will happen is, when some firms are becoming insolvent, due to interconnectedness, there would be a threat to financial system. This is what happened in 2007-8 crisis. So even though lot of measures have been taken, this risk is always present. And when that happens, that financial system is at risk, hopefully it will not happen with the new measures which regulators have taken, but that risk is there. But every few decades, something like this will happen, where at least firms will start going insolvent. And that time there would be fear and panic in the market. And there would be big crash in stock market. Huge crash, 30%, 40%, 50%. And that would be a rare investment opportunity if you have cash to invest, and if you are not panicking because your own portfolio would have gone down substantially. So that is all I wanted to cover in this video. We should prepare ourselves for such situation, which is not really good for the economy or asset, but it does provide a rare investment opportunity. So thank you for listening and watching this video. Have a nice day.